What's up everybody, Richard here checking in with another new YouTube video for this week. We've obviously been going through some absolutely crazy times these past couple of weeks, you know, with the whole coronavirus crisis thing that wasn't meant to rhyme. There's obviously the financial implications on that, the implications on lending we've had, all those different kind of things. It's been a pretty weird time. I've never seen anything like this in my lifetime. I imagine most of the people watching this have never seen anything like this, and we probably won't again. So it's definitely changing the world in loads of different ways. For small business owners, there's been a lot of, you know, kind of uncertainty on what was going to be out there to help people. We've obviously got the CBILS, the Coronavirus Business Interruption Loan Scheme and stuff like that. But what I'm here to talk about today is the Coronavirus Bounce Back Loan Scheme. You've probably heard about it, but there's loads of kind of not uncertainty about it, but a lack of clarity for some people on what the bounce back loan is, how it works, and what it can actually be used for. So I'm going to give you my understanding of the bounce back loan, how you can potentially use it, but bear in mind, everything I give in these videos is not financial advice. Couple of points just before I get into the main video. If you're looking at me and thinking Richard looks dangerously jakey at the moment, you're correct. Haven't yet showered today, nor have I shaved. I'm wearing yesterday's polo shirt. Like I said, these are unprecedented times, and I think that's kind of reflecting in my image as well. Secondly, what was the second part? Oh yeah, apologies that it's quite dark. I'm underneath my car park just now. That's normally where I take my videos, and all the lights are off for some reason. And thirdly, please remember, especially with this video, what I'm saying is not financial advice. I'm not telling you to go out and do this. If you choose to use anything like the Coronavirus Business Interruption Loan Scheme or the Bounce Back Loan Scheme, anything like that, that is your choice. You're choosing to go and get that loan. Like everything, any type of loan out there are going to be people that misuse these products, people that go and get the bounce back loan and go and play roulette with it, or go and buy a holiday or a car, whatever. I've already seen people doing it already in the last, you know, week or so. So if you choose to go and get that loan, do it on the strength of what you can do to make that money work. Please don't take what I'm saying as advice or telling you it's a good idea to go out and get that loan. Please look at your own personal circumstances first. So firstly, let me just give you a brief overview of what the business bounce back loan is. So it's a loan that's partially backed by the government. So it's a 2.5% fixed loan. It's £2,500 up to £50,000, and it's based on 25% of your turnover. So if you've turned over, you know, £200,000 in the last year, you can then get a £50,000 loan from them. So it can also be based on projected turnover. If your company's not been trading for as long as a year, or you've only started up before the 1st of March, it needs to be. So you can base it on projected turnover as well. So if you're looking at a turnover or at a projection of £500,000, you're still eligible for 50 grand. If you're only looking at a turnover of 100, then you should be looking at a loan of £25,000. Now, something to get straight with this is loads of people are saying that the first year is interest free. That's not true. The first year is not interest free. The first year you have no payments because the government are paying your first 12 months of payments. For example, if you take the £50,000 loan at the 2.5%, everyone gets 2.5%, by the way. It's not like credit based or anything like that. It's just anyone with a business gets it like that. The payments work out about £833 a month. After the first 12 months, you pay that over 6 years. So I've not got the numbers with me at hand, but it's roundabout, for the borrowing of 50,000, you pay roughly 3.5 grand in interest. To me, from a property investor's perspective, that's what I would call free money, because I know I can make a much higher percentage than that per year off of that £50,000. So for me, as an investment decision, it's not a bad decision at all. But obviously, like I said, look into your personal circumstances first. Something to keep in mind, and this isn't so that you can misuse the loan, is that obviously, for example, Barclays are getting 35 applications a minute for this loan. So that's a lot of applications, a lot of manpower needed to look into those applications. So I don't actually believe there's any banks out there who are currently doing in-depth checks on your turnover. So if you were to get your projected turnover wrong and estimate that it was too high, let's say you were expecting a turnover of 250,000 in the next 6 months, because your company was only formed 6 months ago, and you go and your turnover is half of that, well, you're not going to be investigated and have to pay the loan back earlier, anything like that. I have seen instances online of people with turnovers or even dormant companies applying for this loan and getting 50 grand from it. So it just goes to show that they are kind of being quite I guess, not too stringent with these loans. In my experience of getting the loan, it's RBS have been the hardest to get it from. Not because they're being overly, they're not inspecting hugely, they're just, the timescales are a little bit longer. Lloyds were the fastest. They done it in under 24 hours. I know a few of my friends got it in under 24 hours as well from Barclays. If you don't currently have a business account, but you have a business that was formed before the 1st of March, HSBC have set something up to help people get access to a new business account specifically for this loan. So if you're someone who, has been sole trading or just started a limited company a couple of months ago and you didn't get round to starting opening, a business current account, and at the start of this coronavirus thing, they pretty much stopped taking new business accounts, so it might have been quite hard for you anyway, you can go to HSBC and they're going to help you, set up an account to get that loan and get access to those funds as well. Please don't take that point as me saying you should go and lie about your turnover. That's not correct. Whether you do that or you don't do that, that is totally up to you. I've been honest about my turnover in all of my applications for this between two companies, and thankfully in both companies I was able to get the highest amount. Now there's some confusion on what you can use this loan for. Now, there's people walking in the back. So what you use it for is kind of up to you, because it's based on like your business. But when we think about small businesses, that draws down into people's personal lives as well. So if you're just a limited company with sole directorship, there's nobody else in your company, and you're working and you've lost income through the coronavirus pandemic, well, that's going to draw down to your personal life as well. So some people are saying you can't transfer money to your personal account and all that kind of stuff. That's not true. Now, here's a few things I would recommend not doing with this loan. Number one, don't fucking gamble it, right? I know that's hard to say because a gambling addiction is a very serious thing, but if you know you're a fucking gambler, don't go and get this loan and go and spend it on fucking Bet365 or something. It's the stupidest thing you can do. These loans do not have a personal guarantee, right? Which is a great thing. So you're not putting a PG down. So if your company doesn't hold assets, there's technically no kind of asset-backed security there. This is a new loan product that's been put together very quickly. So that's not me saying that you can go and gamble this all the way and fold your company and it disappears. I don't think it's going to be that simple, because you've obviously applied for the loan. Only apply this loan if you can service the interest, and don't look to service the interest through plain roulette. Number two, don't take this loan for non-essential or non-investment purposes. Now, if that means you want to take this loan because you want a holiday or whatever, that's pretty stupid. In my opinion, I guess it's up to you if you can afford to pay it off, if you're somebody who's in a decent financial position already. But I wouldn't say go and get this loan and buy a car or go and buy a watch. It's different if you're maybe using it for essential home improvements, like you need to fix your roof, or you want to put an extension on your house, which is then going to add value to your property. That's a kind of investment without the outlying idea that you wanted it to be an investment. It's still going to add value to your property and blah 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 blah. So it's not really the worst thing in the world, but don't take this loan just for free money. When I said it was free money from an investor's perspective, that's because I know I can make more than 2.5% a year. So that's why it becomes free money for me. If you're somebody who's just going to sit and go, this is free money, you're still going to have to pay this back. So make sure you're not putting yourself in a precarious situation with that loan. Number three, if you want to invest this loan but you don't really know how to invest, I would probably say don't do it. Now, if you have a friend that's told you buy Bitcoin, Bitcoin's a great idea, blah, 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 it may or may not pan out to be a good idea. I know guys that have had success with Bitcoin and all that stuff, but I would probably lean against taking the loan if you don't have any investment experience, or if you don't have someone set up who can invest kind of on your behalf that you trust and is knowledgeable in their sector. If your friend's saying buy Bitcoin, buy Ethereum, buy gold bullion, buy all these things, unless there's someone who has a proven track record of experience and success in that chosen field, and they're not just a mate from your building site or your office or whatever who's read something online about how it's amazing and all that, I would probably not take the loan and invest on that advice. Because if you go and invest that money, you fuck it up and you've made that choice, even if it was on the advice of someone else. If that person is not a professional in that industry and potentially is not FCA regulated to give financial advice, you shouldn't be taking advice from that person. If you have someone who you can joint venture on an investment with, whether that's property based or whatnot, like I know there's probably investors that I have in our company who are probably going to take that loan and might look to further invest with us. That's not something we've advised to do from the outset, but it's something that I guess you could do. So if you don't have someone set up to help you a friend or a business associate, or you can't do it yourself, I would definitely steer against taking this loan. From my perspective, what can you actually do with this loan in property? Now, I can't talk about any other businesses, but you can obviously buy assets with this. If you're in a business where you're, I don't know, in catering or something like that, you can buy hard assets with that money. You can buy soft assets as well, but hard assets are obviously a better investment at the end of the day, because you can refinance those assets further down the line if you ever did find your business in difficulty again. So whatever is an asset within your company, if you're a building company, you know, you can get plant with that. If you're a cleaning company, you can get cleaning plant, all those kind of things. But for me, it's probably going to be best used towards commercial lending. Now, with a common mortgage product, like a residential mortgage product, or even like a buy-to-let mortgage product from a staple lender, you're probably going to struggle to use these funds to get a loan, because you're basically getting a loan and using a loan as the deposit. Doesn't really make sense from a lender's perspective. Thankfully, our company's in a position that we have enough money in the company that the 50k isn't going to make a huge difference, so we can still get, you know, common lending off the basis of our other monies held inside those accounts, and we've got them split across a couple of accounts, so it's a little bit easier. But when it comes to commercial lending, you know, bridging products and just commercial finance in general, I don't imagine these lenders are going to have a huge distaste towards that loan. Now, there is always going to be some lenders that are just going to say a point blank no. What you need to remember is we are still in the very early stages. I personally haven't applied for any commercial lending using this as backing yet. I don't actually know anyone who has, because it literally only came out last Monday, I think, so we're just over a week since it came out. But from the people I've spoken to and the professionals I know in the bridging industry, it doesn't seem like that's going to be a problem. So if you're looking to go out and get a bridging loan on a property, you will be able to use that 50k to back it. What you can also do from an investor's perspective is use that towards a cash buy. So you can either buy something, let's say you got £50,000 from them, or you got 25,000 or whatever your situation is. You can use that money to go and wholly buy a house in cash. So if you're in the Glasgow area, obviously if you're in London, you wouldn't get a fucking toilet seat for that. But if you're in Glasgow, you know, you can pick up flats here for 30, 40, £50,000, buy to lets that will do okay. And if you're making, you know, let's say £400 a month in rent off those properties, they're not going to be your higher rental, so you're talking like 350, 400 tops. If you're making £400 a month on that, and your loan repayments are 833 quid. Well, if you can service the difference between that for those 6 years after your 12-month payment holiday, you're going to have a flat there that's cash bought, no debt for you or on the property, and you can probably refinance that and pull your money back out. So that's only if you can service that debt. If you already have, you know, money within your company you were looking at investing, let's say you had 100k, or you had 50k there and this 50 came in and added up to a total pot of 100. I've been seeing, you know, small 3-unit portfolios being sold for around about the £100,000, £110,000 mark. That'll probably make you about £1,000 a month. So if you think about it, if you get an opportunity like that, they don't always arise. I'm quite lucky, I get past stuff like that quite often, but I guess that's because I'm kind of in about and doing, you know, transactions and stuff like that. So if you got something like that was cash flowing, say £1,000 a month, you would be using that £1,000 to pay off your loan repayments of 833, and you'd be left with a small amount at the end. Once your 6-year term is over, you've then got 3 properties which are cash bought, no lending on you, all the property, and you could probably look to refinance them to, you know, I don't know, add extra value to them. Or if you had the money at the time, you could refurb and refinance as well. You know, if you are another type of investor with experience in, you know, shares, commodities, CFDs, please bear in mind CFDs are very highly volatile. So if you've not used or traded CFDs before, it's quite hard. I have traded CFDs before with reasonable success. It's not something I like to do all the time because it is quite stressful. Over 80% of retail investors will lose money trading CFDs, so please make sure you're not just diving in crazy and, you know, buying currencies and all that kind of stuff. But if you have previous experience in trading any type of commodity, stocks and shares, and you're successful at doing so, there's not really any reason why you couldn't invest this loan. You could go and do it. What you need to do is just make sure you're wholly kind of what's it called? What's the word? You're confident. Yeah, sorry, that's not even a hard word. You're confident in your skills and you know that you'll be able to make higher than that 2.5%. So really, what this all boils down to is if you're confident you can make more than 2.5%. I know I am. I know I can. I've done it before. I've done it for years. Do you know what I mean? From different investments and property, CFDs, whatever. I know I can do it. This is all going to go towards property for me. That is my main focus now. But if you know that you can make more than 2.5% legally, morally, ethically and intelligently, probably bloody biggest one, that's the boxes ticked, then you should maybe consider this loan. If you're in a situation where you don't know if you'll be able to do that, maybe speak to your accountant or a finance professional. I'm very lucky. I have a finance director who is very experienced, who I can bounce stuff off, and other people, you know, in the property industry that I can speak to and look to for advice. And for me, it was a great decision. It might not be that for you. I just think if you do have the skills there and the team around you to make this work, we're probably not going to see lending this cheap and easy to get again in my lifetime. Some of the people watching this might be older, so that probably includes your lifetime as well. As always, thank you very much for watching this video. I appreciate you taking time out of your day to give it a watch. If I gave you some clarity and, you know, cleared up anything on the bounce back loan, and if you enjoyed the video, please give it a like down below. I would really appreciate that. You can also do a love heart button. Don't really know what that means. If you like the content, please feel free to subscribe to the channel. And also, if you have any questions on this loan, if I'm able to ask them or if I'm qualified to answer them, I will. If I feel it's not something I can answer, I will ask, you know, my financial director or something like that. But I think the video is pretty self-explanatory. If you can make more than 2.5%, take it. If you can't, or you have an addiction that is going to hinder you in using that money, don't take it. As always, be smart with your money, invest it wisely, don't be a dauber, and that's pretty much it for today. Cheers.